Picture this. The world's largest asset manager, controlling over $10 trillion in assets, might be about to file for a Hedera HBAR spot ETF. We're talking about BlackRock, the same financial giant that single-handedly legitimized Bitcoin and Ethereum ETFs, bringing in billions of institutional dollars overnight. And right now, HBAR is trading at just 22 cents, sitting on the edge of either a massive breakout or a brutal 20% crash. The next few weeks could determine whether you're looking at life-changing gains or devastating losses. This is not financial advice, but this could be the most important crypto video you watch this month. Before we dive into the technical analysis that's keeping me up at night, we need to understand exactly what we're dealing with here. BlackRock isn't just another investment firm. They're the kingmakers of global finance. When they filed for Bitcoin and Ethereum spot ETFs last year, the entire narrative shifted from crypto is dangerous speculation to crypto is institutional-grade investment. The numbers don't lie. Bitcoin ETF inflows reached $17 billion within months of approval. Ethereum followed with billions more. These weren't retail investors throwing lunch money at meme coins. This was serious institutional capital flowing into digital assets for the first time in history. Now, unconfirmed reports and market whispers suggest BlackRock could be eyeing Hedera's HBAR for their next ETF filing. No official announcement has been made, but in crypto markets, rumors move billions. The mere speculation has already ignited conversations across trading floors and crypto Twitter. But why HBAR? Why now? And most importantly, should you be positioning yourself before this potential announcement, or running for the hills as technical indicators flash warning signs? HBAR isn't your typical altcoin. While most cryptocurrencies struggle with enterprise adoption, Hedera was built specifically for institutional use. The hashgraph consensus mechanism processes over 10,000 transactions per second with finality in 3-5 seconds. Compare that to Bitcoin's 7 transactions per second or Ethereum's 15, and you start to understand why Fortune 500 companies are paying attention. The governance structure reads like a who's who of global enterprise. Google, IBM, Boeing, Deutsche Telekom, and others sit on the Hedera Governing Council. This isn't some decentralized autonomous organization run by anonymous developers. This is corporate America's stamp of approval on distributed ledger technology. Regulatory compliance has been baked into Hedera's DNA from day one. They're actively working on Stablecoin Studio and supporting legislation like the Genius Act. For BlackRock, which manages pension funds and institutional portfolios worth trillions, regulatory clarity isn't optional, it's mandatory. HBAR is already included in 27 digital asset indexes and at least 13 ETFs and ETPs worldwide. Institutional infrastructure isn't being built, it already exists. Some reports suggest the SEC has reviewed filings tied to HBAR, indicating regulatory discussions may be further along than most retail investors realize. But trading at 22 cents, HBAR remains dramatically undervalued compared to its enterprise partnerships and technological capabilities. Market cap sits around $8 billion, a fraction of what similar enterprise-focused cryptocurrencies command. Now for the sobering reality check. While institutional rumors swirl, HBAR's price action is painting a concerning picture. On August 29th, HBAR dropped 4.75% to 22 cents, with short interest climbing to $2.96 million. The charts are screaming danger signals. A descending triangle pattern has formed on daily time frames, with HBAR retesting support levels more than 6 times. Historical data shows when descending triangles break down, the results are brutal. Technical analysis suggests if HBAR closes a daily candle below $0.223, we could see a 20% crash toward the 18-cent zone. Liquidation data reveals over-leveraged positioning. CoinGlass shows $2.96 million in short positions versus only $832,000 in long positions near critical support levels. Bears are dominating, and one decisive break could trigger a cascade of liquidations. Despite the bearish technical setup, deeper data reveals a more complex narrative. Exchange outflows hit $3.18 million recently, a significant signal that smart money might be accumulating during this weakness. When tokens leave exchanges, it typically indicates long-term holding rather than active selling. The Relative Strength Index, RSI, sits at 43.80, firmly in neutral territory. HBAR isn't oversold, but it's not overbought either. This creates a fascinating dynamic where the next major move could determine months of price action. Trading volume surged 45% during the recent price decline, suggesting increased interest from both institutional and retail participants. Volume spikes during price drops often indicate capitulation selling, but they can also signal major accumulation by sophisticated investors. Multiple crypto ETF applications historically take 6-12 months from initial filing to approval. If BlackRock were to file for an HBAR ETF tomorrow, we wouldn't see trading until late 2025 at the earliest. However, the filing announcement itself could trigger immediate price movement, as we've seen with previous crypto ETF speculation. Market makers and institutional investors often position months ahead of expected approvals. If you believe BlackRock ETF filing is inevitable, current prices around 22 cents could represent exceptional entry points, assuming technical support holds. Bull case scenario: BlackRock files within 90 days, technical support holds at 22 cents, institutional FOMO drives accumulation, enterprise partnerships accelerate. HBR could realistically target 50 cents, 75 cents in the next 12 months, representing 150 to 250% gains from current levels. Bear case scenario: no ETF filing materializes. Technical breakdown occurs below 22 cents. Crypto winter continues, enterprise adoption stagnates, HBAR could test $0. 15 or lower, representing 30% plus losses from current prices. The probability matrix suggests roughly 60% chance of continued sideways movement, 25% chance of significant upside, and 15% chance of major breakdown in the next 30 days. The convergence of institutional rumors, technical analysis, and fundamental developments creates a perfect storm for HBAR. BlackRock's potential interest validates what enterprise investors already know. Hedera's technology and governance structure represent the future of institutional blockchain adoption. But markets don't care about fundamentals in the short term. Technical levels must hold, and speculation must transform into reality. The next few weeks will separate long-term believers from short-term traders. Position sizing becomes critical in this environment. If you're bullish on HBR's institutional potential, dollar cost averaging below 25 cents could prove profitable over 12-24-month timeframes, but never risk more than you can afford to lose, especially with descending triangle patterns threatening immediate downside. Remember, in crypto markets, being early looks identical to being wrong until suddenly it doesn't. BlackRock's involvement could transform HBAR from a $8 billion market cap altcoin into a top 10 cryptocurrency. The question isn't whether institutional adoption will happen, but whether you'll be positioned when it does. Subscribe for more institutional crypto analysis, and remember, this rapidly evolving market requires constant monitoring. What looks impossible today becomes inevitable tomorrow in the world of digital assets. Disclaimer: this content is for educational and informational purposes only, and should not be construed as financial advice. Cryptocurrency investments carry substantial risk of loss and may not be suitable for all investors. Past performance does not guarantee future results. Always conduct your own research and consult with qualified financial advisors before making investment decisions. The creator of this content may hold positions in cryptocurrencies mentioned.